We're getting in the trenches with gold miners, Scott, my favorite topic. Let's go with Yamana Gold first. Didn't lower production guidance. That's pretty rare for a lot of the gold miners in the last quarter, and delivered a pretty solid beat that was a few weeks ago. Hit a new 52-week high on Monday. Is it breaking out? Is this it?
I think what's important here is that finally the miners woke up, and we talk about how streaky they are. So when they're in play, you got to focus on the group. And this was the first one to make a new high to show you could actually play a 52-week high trade. All right, your first entry hopefully was when it broke above this 14 or 1376, and now it's in new highs. So this is something to watch to see how much momentum we can get into new highs. I wouldn't chase this one, but there are a lot of other ones that look like they're ready to set up and go just like this.
All right, so let's get to them. The first one on my list is Gold. It's been in the penalty box for a long time, had a lot of production issues. It also had a mine in the Ivory Coast, which had a civil war, but everything is okay. It's back up and running. They are selling all their gold. It looks really good. They had a great quarter. They didn't lower production guidance, which was a big deal. A lot of companies did. I've liked this company for a while, and not for any technical reasons, but because the CEO actually says when things are bad. And I think that that's actually a really good sign.
So we've an honest CEO. That's good.
And it's worked out. He's like, yeah, it's really bad right now, but it'll get better. And I tend to believe that. Also, it focuses on high-grade gold rather than a huge amount of gold, which helps them when costs rise. And they're organic growth. They're not acquiring. So how's the chart?
So if you like it fundamentally, I'll show you I actually like it technically. So that means we should be ready with this front and center for a breakout. Here you go. Nice pennant above all the moving averages. This looks like it can get going. This thing starts getting above 70. You're going to see a nice breakout move. If you're in tier one, I think you could play this for momentum to the upside. This looks technically set up and ready to go.
So I'm sorry, do you want to add here then?
I think you could add here for momentum as long as it gets above that level and stays above that level.
All right, let's go to Royal Gold. It's a royalty company, and there are a couple ways that this royalty company can make some money. They can give money up front and they get a percentage of the gold production throughout the life of the mine, or they give money up front and then they have to buy the gold, but they get a nice juicy fixed price. Now, this is obviously a really good way to do it when companies are raking in the gold, but when they struggle like they are right now, it leaves Royal Gold a little dicey with its own profits. But what is the chart saying?
This chart looks good, ready to go as well. There are a few charts that look ready to take off. This is one of them, GOLD. You take a look here, look at this one. You know, granted,
this is Gold. We got to go to RGLD.
RGLD.
Yeah.
Okay, I thought that's the one we just did.
No, we switched them.
All right, RGLD is the one that we get above. All right, 70 it can go, and now we go to GOLD. Same type of pattern, different company. This one is if it starts going above this 103.70, 104. This looks like it's ready to go.
All right, so different stocks, different stories, same strategy with both stocks. Okay, let's go to Barrick. It's not a particularly sexy stock. It's the largest gold company in the world, but is there a trade there?
I think this one is lagging a bit. It's maybe bigger cap. I do see one area of resistance that it can get through. This is 51. It gets through 51 and holds. It can go back to the highs. It doesn't look quite ready. It's not technically as sound, but there could be a move here as long as this group stays healthy. And it's obviously harder to move a bigger cap stock, so that's why maybe it's lagging.
And for what it's worth, though, Barrick, it did also not lower production guidance. It's like a double negative there. It kept production guidance for 2011. One stock that didn't is Gold Corp. It was one of the best performing gold stocks in 2011 and then had to miss its production guidance, really hurt the stock after earnings. But its 5-year growth profile of growing 60% is still intact. So I wonder if it's sort of a buy here and hold it for 5 years kind of story.
Well, if you could hold it for 5 years, God bless. I think that it's trying to repair the chart technically. I've looked at this many times. It definitely frustrated investors when it looked great here, ready to go, and it failed. Now it seems like it's regrouping, it's cupping back up. If it starts getting above this 51, I think it'll look better. It'll probably take time to get through these highs because you have a lot of memories here, but it looks like it's getting back more longer term, not for momentum right now.
Real quick, I want to touch on quarter-end mines at CDE, 50-50, silver and gold, talking to the CEO on Thursday, so I wanted to get your take on the technical chart.
I think it's lagging, the group. It's not a pure play right now, so investors are avoiding that type of scenario. CDE, because silver also has been lagging gold. It looks okay. I would give it some more time. This is a very big level right here around 29. It did have a move off the lows. If it could stay above this 26 area, perhaps it's in the game for higher prices. And I remember that CEO. That CEO was very
CEOs, new management.
So maybe it'll be in better shape then.
New management. All right. So, but the takeaway: Royal Gold and Gold are two that are looking ready to break out. Okay, let's go to some fast ways to